Advanced second quarter GDP number. Futures are higher ahead of that, with the Dow futures up by about 25 points. S&P futures up by 7. The NASDAQ indicated up by just over 40 points. Rick Santelli is standing by at the CME in Chicago. And Rick, take it away.
Yes, these are the advanced, of course, so they will be modified. But we are expecting a number around 2.5%. Last quarter, you do realize, was down 0.5%. That was the weakest quarter since first quarter of 22. And they're out up 3%, up 3%. Better than expected. That would be the highest level since the third quarter of 24 when it was up 3.1%. On the consumption side, up 1.4, very close to estimates. Up 1.4 would be the best since the last quarter of 24. And I do want to point out, if you look at the consumption numbers for last quarter, up 0.5%, that is really weak. As a matter of fact, that goes in comps to the worst, darkest days of COVID when it was down 30%. However, I wanted to know, outside of COVID, when was the last time we saw consumption that low? You're going back to June of 2011. Just as a footnote, on the pricing index side, less than expected. We're looking for a number over 2%. This number is at 2%. 2% would be the lowest pricing index number read going back to the third quarter of 24 when it was 1.9%. And finally, the core personal consumption expenditure price index, that's a quarter over quarter number, expected to be around 2.3, comes in a little heavy. This one's a little heavy at 2.5. 2.5 would be the highest since the last quarter of 24 when it was 2.6. So very good news all in all, especially considering that Liberation, April 2nd, falls in this quarter, and it was definitely better than expected. Now, does that mean there can't be some payback in the quarters ahead? Possibly, but nobody ever knows what the quarters ahead are.
3% growth on an annualized basis, just reported for the second quarter. 3% growth. That is better than expected. It's stronger than expected. So where's the recession and where's the impact of tariffs? I don't see it in that report. Do you?
No, Stu, I don't see it. I mean, the tariffs have been generating a tremendous amount of revenue. We've got record readings in July. We could be upwards of $300 billion in revenues for the year. Even the CBO, which has very pessimistic forecasts, they think GDP isn't even going to grow 2%. Even the CBO thinks we could generate about $3 trillion in revenues over the next decade. So we've got the revenues. The inflation is de minimis. We saw a big recovery in growth in the second quarter, powered by a couple areas. One is a real improvement in the trade deficit. It shrunk. We expect that to continue given all the trade deals that the president has put forward. And this CapEx comeback, capital spending